Hello, this is Edwin Cabrera here in Manassas, Virginia, and I want to welcome you to the Cryptocurrency Secrets module. I'm sure that many of you are very curious about what is all this fuss about the 21st century money of the future. So I congratulate you and I applaud you. You're at the right place at the right time. If you're trying to find more information about how does this cryptocurrency work, so I've made 8 different videos which is going to explain this and break it down into small pieces so that you understand basically the tricks of the trade that you'll need to know on how to manage your cryptocurrencies and how to make money with this new digital currency. Once you go through these modules, you will know more than 90% of the people who are out there who are either involved in cryptocurrency or for most part, most people do not know anything about cryptocurrency. So this is a great introduction for you to see exactly how you can get involved in it. We're going to cover 5 very important topics. The first one, of course, is what is cryptocurrency, so you have an understanding of what it is. Then we're going to know exactly how does it work, and we're going to tell you exactly how do people determine what their value is, and what do you use cryptocurrencies for? What's the purpose? And then why are we using cryptocurrencies now? So we're going to cover those real quick. Okay, so let's start with what it is. What is cryptocurrency? It's a good question. Everybody wants to know what is a cryptocurrency. Let's break down the terms and make it simple. Crypto is a cryptography. It's basically how do you now make a currency or an exchange, a way of monetary exchange for goods. And just like you exchange money, currency you have every day, a US dollar, for example, you could trade it back and forth for goods and for exchanging of goods. But this is done in a digital way. It is all done through an algorithm that the computers have to figure out in order to create these cryptocurrencies or whichever one, Bitcoin or whatever, which I'm going to explain further along the way. Now, where did this come from? The cryptocurrency, basically, it comes from an invention by Satoshi Nakamoto. Now, a lot of people don't know if this was a person or this was a group of people. This is still kind of cryptocurrency folklore as to where it came from, but it was a paper that was developed, and that was the birth of not only cryptocurrency, particularly Bitcoin. The beginning was Bitcoin, and now we have hundreds and hundreds of various cryptocurrencies that have come up after that. So how do cryptocurrencies work? What is so unique about this particular technology? The reason why cryptocurrencies are such in demand and so important is because Satoshi Nakamoto was able to figure out a way to decentralize digital cash. What does that mean? What is a decentralized cash system? A decentralized system means that the network is powered by its users without having any third-party central authority or middleman controlling it. Not like the central bank or not like a government has the power over this system. No one can actually control this system. It is genius. Now, the problem with a centralized network is in the payment system is what's called a double spending. When you double spend, basically you're going to pay for a product twice. So someone's going to claim that they paid for this and they're going to use that money and pay for something else. So double spending happens when one person spends the same amount twice, and he buys one thing and then he says, oh, he's going to use that same money to buy another thing. So that was very important, how to overcome that. And this is usually done by a central server that keeps track of all your balances. You need a way, a ledger kind of system to keep track of everything that's going on so that no one can make claims as to, oh, I used this money in one place and I used the same money in another location. Cryptocurrency is just the tip of the iceberg. The true innovation here is the blockchain technology, is the decentralized technology that can be used for many, many things, which I will go further into later on. But the blockchain technology functions in managing and maintaining a growing set of data blocks. And this is by using the decentralized or known as the peer-to-peer network, P2P. In blockchain, once a piece of data is recorded, it cannot be edited or changed. To explain this in another way, it enables you to send a gold coin via email. The P2P network is a consensus network, which allows a new payment system and the transactions of new digital money. For example, a cryptocurrency like Bitcoin consists of its own network of peers. Every peer has a record of the complete history of all the transactions as well as the balance of every account. By the end of every transaction and upon confirmation, the transaction is known almost immediately by the whole network. A transaction includes a process where A gives X amount of Bitcoins to B and is signed by A's private key, or what's called a Bitcoin address. After it is signed, a transaction is broadcast in the network. The information is sent from one peer to every other peer on the network. Confirmation is a critical stage of the cryptocurrency system. Confirmation is everything. If the transaction is not confirmed, it has the possibility of being hacked and forged. When a transaction is confirmed, it is set in stone. It cannot be reversed. It is impossible to be hacked. It is not forgeable, and it's part of a permanent record of the historical transaction called the blockchain. The blockchain is like an online ledger where all transactions are recorded and made visible to the whole network. This shows that cryptocurrencies are not secured by people or trust, but by complex mathematical equations. It is very secure and is highly unlikely that the address of a currency is compromised. Only miners are able to confirm a transaction. This is the role of the miner in the cryptocurrency network. They record transactions, verify them, and disperse the transactional information in the network. For every completed transaction monitored and facilitated by the miners, they are rewarded with a token of cryptocurrency, for instance with Bitcoins. Since miners play a major role in the cryptocurrency system, let's take a look at what is a miner. First and foremost, anyone can be a miner. Miners are needed because of the nature of the decentralized network where they have no authority to delegate tasks, and the cryptocurrency needs some kind of system to prevent any form of network abuse. For instance, if a person creates thousands of peers and spreads forged transactions throughout, it will disrupt the system immediately. To be a miner, you need to be able to solve cryptologic puzzles, which are a set of very complex mathematical questions set by Satoshi Nakamoto himself. If you successfully solve the puzzle, as a miner, you can build a block and add it to the blockchain. The miner is also given permission to add cryptocurrency transactions to the systems, which automatically grants him a specific number of Bitcoins. This is the only way to create valid Bitcoins. Bitcoins can only be generated if a miner can solve a cryptographic puzzle. The level of difficulty increases with the amount of computer power the miners invest. The value of cryptocurrencies are dependent on the market, where the prices of various cryptocurrencies vary a lot and is one of the most fluctuating and volatile markets to date. The price of cryptocurrencies, like other products, are dependent on supply and demand. If more people demand a particular currency and it is short in supply, then the values increase. More units are mined by miners to balance the flow. However, most currencies limit the supply of their tokens. For instance, the total amount of Bitcoin issued will only be 21 million. Therefore, Bitcoin supply will decrease in time and will reach its final number by 2140. It also explains why Bitcoin's value is higher as compared to other cryptocurrencies. Now, you may be wondering, why should we use cryptocurrencies? And cryptocurrencies, there are three basic transactions that can be performed on cryptocurrencies. And the best part is that you do this all online. The first one is Bitcoin trading. Second is personal spending. You can buy just about anything at this point with cryptocurrencies. And the third is crowdfunding. Another way that people use it is by holding or buying and holding cryptocurrencies. Bitcoin trading can be very profitable for both professionals and beginners. The market is new, where arbitrage and margin trading is widely available. The currency's high volatility has also played a major role in bringing new investors to the trading market. Compared to other financial currencies, Bitcoin has very little barrier to entry. If you already own Bitcoin, no verification is required, and you can start trading almost instantly. Moreover, Bitcoin is not fiat currency. This simply means the price is not related to the economy or policies of any single country. And unlike stock markets, there are no official Bitcoin exchanges. Instead, hundreds of Bitcoin exchanges operate 24/7 around the world. Because of no official exchanges, this results in a no official Bitcoin price, where the currency is known for its rapid and frequent price movements. Presently, you can use Bitcoin to purchase almost anything, from buying cars to traveling the world. In December of 2013, a Tesla Model S was purchased for a reported 91.4 Bitcoins. The dealer, located in California, continues to accept Bitcoin as a means of payment. They have managed to sell a Lamborghini Gallardo for 216.8 Bitcoin. Just head over to cheapair.com. On November 13th, they announced that they would be the first online traveling agency to accept Bitcoin. You're able to purchase flights, hotels, car rentals, and cruises. You can even book the whole package. Cryptocurrency also provides a chance for you to give back to society. How? By what's called crowdfunding. You're able to be part of someone's success story by donating to a crypto crowdfunding project. Companies such as Lighthouse have built their crowdfunding platform using Bitcoin. The perks of donating through this system are that you will not be charged for your donation, and funds will not be released unless the project meets its criteria. You're also able to withdraw from the campaign before its completion. You have complete control over the donation. Examples of successful funding campaigns are from Dogecoin, which includes campaigns run for NASCAR driver Josh Wise. The big question is, why cryptocurrency? Apart from cryptocurrency being a very secure and is run through a decentralized network, there are also a lot of other qualities which make cryptocurrencies the most talked about topic in town. It has also been considered as potentially an investment vehicle, which may garner massive returns. Have you heard of Eric Finman? The teenage Bitcoin millionaire who started picking up Bitcoin at only $12 a piece back in May of 2011 when he was 12 years old? He received the Bitcoin as a tip from his brother and as a $1,000 gift from his grandmother. He now reportedly owns over 403 Bitcoins, which held a value of roughly $2,600 at that time, where it had accumulated to a stash of over $1 million and change. There are various concrete reasons why you should invest in cryptocurrency. We will elaborate on this further in other videos, but let me give you a brief summary on the perks of buying cryptocurrency. First are their transactional properties. The cryptocurrency transaction is fast and global. Transactions are propagated immediately in the network and is confirmed within minutes. Since the transactions are managed by a global network of computers, they do not take into account your physical location. It is possible for you to send your cryptocurrency to someone in your vicinity, or even if they are living on the other side of the world. Secondly is their monetary properties. The currencies are in controlled supply, thus there is a high chance that the value of the currencies appreciate over time, as mentioned earlier. Bitcoin will reach its final number somewhere in 2040. Third is that you have more control over what is going on in your account and how the system operates. This is due to the decentralized nature of peers, which keeps a consensus on account balances and the transactions made, as compared to your physical bank account, which can be changed and controlled by people you don't see and governed by rules you don't even know. If you're ready to learn the secrets to making money with cryptocurrency, go to secretstocryptocurrency.com and get your free copy of this incredible resource of how to make money with cryptocurrencies.